What is going on, guys? My name is Richard, and welcome back to another stock market outlook video. As usual, we'll go through the price action of the major indexes, talk about how the true market leaders are doing, as well as talk about how my previous watch list did over the past week, and we'll also talk about the sentiment from my sentiment surveys, as well as the put-call ratio. Then we'll round off the video by talking about the big picture article from IBD, as well as the GMI signal from wishingwealthblog.com. And finally, we'll put all that information together and determine what the current trend of the market is. All right, so to start things up, we'll first take a look at the major indexes. And starting with the NASDAQ 100, you can see that on the week, we were up 2.14% for a pretty decent gain, but we did have a weekly closing range of only about 50% and a daily closing range on Friday of about 40.91%. So from this bar, the expectation is we go higher or sideways. And overall, we are still in a clear stage 2 uptrend, which is bullish. And overall, you can see we're just above this recent consolidation, so hopefully we can continue that next week. Going now to the IWM, the Russell 2000 index, you can see that overall we had a very strong week, up almost 6%, with a weekly closing range of 98% and a daily closing range of 94%. So definitely a very strong week from the IWM and small caps, and you can see that this is holding up very well despite the rotation out of the software tech sector that we're seeing in this market. And very quickly, I have gotten a couple of questions about what this weekly closing range and daily closing range mean. Basically, they are a representation of where the stock closed within its range from the high to the low. So the IWM closed right at 98%, which means it closed right near the top on the week, and right at 94% if we go to a daily, so very close once again to the top of the trading range. And the higher it closes, the more power behind the move. And if we go back to the QQQ, you can see that on this past Friday, we closed right at 40%, so definitely showed a little bit more weakness compared to the IWM. So I hope that explains it, and please let me know if you have any further questions, and just let me know down in the comment section below. But overall, looking at the overall chart pattern, you can see we just broke out of this cup and handle formation on the IWM, which I view as very bullish, and overall we are in a stage 1 because we are above a declining 30-week moving average. That's this red line right here. So hopefully this can flatten out and start moving up, and then we can start a stage 2 uptrend on the IWM. And lastly, taking a look at the S&P 500, we were up 2.45% for a very strong week, and we had a beautiful closing weekly and daily range at about 98% for the week, and on Friday at 94%. So a very strong week. And like on the IWM, you can see we are above a declining 30-week moving average, although it's very close to flattening out and moving up. So we are currently in a stage 1. And we also continued this move up from this cup and handle formation. And we also filled this gap that we set all the way back at the drop in February. So I think this is very bullish, and hopefully we can soon retake new all-time highs. And from the weekly bars on both the S&P 500 and IWM, the expectation is we go sideways or higher. So those are the major ETFs, and now going to the Dow Jones, you can see we also had a very strong week, up 3.91%, and we are above a declining 30-week moving average, so we are currently in a stage 1. And looking at gold, GLD, you can see it had another very strong week, up 3%, and overall we had a weekly closing range of 67% and a daily closing range on Friday at about 50%. And taking a look at the VIX, you can see that we made a new recent low, which is a good sign, and we are currently trending below all the key moving averages, so I think this is a very good sign. And next up, looking at XLF, the financials, you can see we had a very strong week, up 3.54%, and we retook this declining 30-week moving average. So let's see if this can stick, and if so, we would be in a stage 1. And lastly, taking a look at the FFTY, the Innovator IBD 50 ETF, you can get a sense of how growth stocks are performing, and overall this looks very similar to the NASDAQ. Overall, we had a gain of 1.79% on the week, and a weekly closing range of 38%, and a daily closing range on Friday of 30.97%. So definitely seeing a little bit more weakness from the tech sector and growth stocks in particular, and we'll definitely get into that when we talk about the true market leaders. But now let's go through the NASDAQ and the QQQ in particular, and let's take it day by day. So starting with Monday, you can see we had a gap up and a very strong close near the upper half of the trading range, and overall we are up 1.35%, and a lot of growth stocks acted very, very well on this day. And that action continued on Tuesday, where we had a slight gap down, but we had a nice red to green move and finished right near the high of the trading range. And then Wednesday, we saw a nice contraction, not much trading going on here. And then on Thursday, we had a very strong move on higher volume than the previous 2 days and finishing right near the highs of the day. However, on this Friday, we did have a lot of bad action, and a lot of growth stocks in particular were hit very, very hard, and we'll definitely get into that. But overall, you can see we had a surge in volume, so this was a distribution day on the NASDAQ, and overall, we had a poor closing range at about 37% on the day. So that is the NASDAQ on a daily time frame, and from this last bar, the expectation is we go sideways or down. And really, I want to see us hold the low of this week that we set on Monday. Otherwise, we would fall back into this consolidation, and that definitely would be negative for me. And going to the main chart right here, you can see that we are in the middle of this channel right here. So I definitely think we did need a bit of a break, especially since on this Thursday, we were getting close to the top of this upper channel line. And next week, hopefully we can go sideways a bit and then move up once again. So that pretty much covers the major indexes. And now let's get into the leading stocks in the market. And sorting these stocks by their weekly performance, you can see a lot of them were red on the week. And in particular, software was hit incredibly hard. DDOG, Fastly, CrowdStrike, Coop, all of them were down 5, almost 10, even almost 20%. And a lot of these charts definitely need time to absorb this selling, set things back up, and then maybe they can be ready for another uptrend after they form flat bases, cup and handles, and restart things once again. But definitely, if you are a swing trader, don't try to chase things down and guess the bottom, because as you can see with DDOG, we slice through that 50-day moving average on volume. You have a huge down red bar, and you don't really have an edge down here. You got to wait until things set up, form a double bottom, form another constructive base. And these stocks could be back, or this could be the top. You don't really know, and that's why you want to wait until there is a high probability setup in your favor. So in lighter news, let's go through the better performers. AMD is continuing its uptrend, trending above all these moving averages, and I'll definitely be looking for a consolidation to get into the stock. TTD actually acted well after its earnings report. When a lot of stocks like Fastly and DDOG got hit very hard after earnings, TTD actually absorbed that and actually had a decent day on this past Friday, up about 2.13%. SE as well is hanging in there, although it did have some selling later in the week, but you can see it found support potentially at the 10 EMA. NVIDIA as well is acting decently. You can see it's still above that 10 EMA. Chegg had a great earnings report, and you can see is very tight this past few days and tried to break out on this Friday, but with the overall market selling off, it was very hard for this stock to make any progress. Shopify as well is going pretty much sideways near these all-time highs. Zoom is acting reasonably well and actually retook that 21 EMA on this past Friday. And Tesla as well really was battling that 21 EMA and managed to stay above it on Friday as well. So my advice would be to focus on the ones near the top half of this list and really leave these ones down here and give them time to set things back up and then potentially have another uptrend. But right now, there's really not an edge in chasing these bottoms, and you could get hurt very, very badly. So that's how these true market leaders performed. And now let's talk about my previous watch list. And if we sort this by the weekly change, you can see we had a very strong performance from the top ones on this list, but we definitely did have some losers here as well. So to start things off, we'll start with Run, and this moved very, very well from the short-term stochastic cross. And what I saw on this chart last week was it seemed like it formed an intermediate low right here because of all the support in volume right here on this Friday. So if it moved, you really had a high probability that it wouldn't break this low right here. And you can see it moved up 8% on Monday, continued on up 9.45% on that Tuesday, and then had a very strong Wednesday as well before basing and pretty much going sideways. So this does have earnings early next week, so I don't think it's actionable at this time. GSX had a very strong week as well, but had a huge selling spike on this Friday. And I'll actually make an entire video about this stock that I'll be posting either late today or early on Sunday. So I really want to leave that analysis for that video. The trade desk, as we talked about, acted reasonably well after its earnings report. Vroom moved up from the pivot, but did see some selling on this past Friday. SE we already talked about. NVIDIA we talked about. Chewy tried to break out, but then fell back later in the week and kind of revisited its pivot. So this could be actionable next week on a short-term stochastic cross. And Zoom as well, we already covered. So now moving on to the worst performers, we've got CrowdStrike. And overall, it was acting reasonably well until a lot of the selling happened in the software sector. This day right here was definitely a red flag with a lot of the selling happening in the software sector and it being down 4%. It sliced through the 21 EMA and also saw a lot of volume coming in towards the downside. and it has found support at around this 100 level and its green line, so it could bounce from here, but make sure you wait until there is a proper entry point. Coop also had some selling, and you can see that we sliced through the 21 EMA as well on higher volume, and it found support right where you would expect it, near the lows of this consolidation. BABA as well saw some selling last Friday. eBay, you can see, never quite made it through this downward trend line right here. And lastly, we've got Adobe, which was acting very well on this Thursday, finishing near the high of the trading range and breaking through this short-term resistance right here. But we saw that same selling on Friday and a big spike in down volume. So overall, be careful with the stocks you are in at this moment. Make sure there's no huge red flags, and you want to be sticking with stocks that are acting well. So moving on, we've got the sentiment surveys, and overall we saw a big drop this week, down to 40.9% bullish, and you can see last week we were all the way up at 57.5% bullish. So overall, I think this is a positive sign, and this could mean that people have gone very bearish very quickly, and fear now is back in the market. And looking at the put-to-call ratio, we can see that there is some movement towards the upside as well, which is a good sign, but we are still somewhat elevated on the put-call ratio. And now moving on, we've got the big picture article from IBD, and overall the headline is the stock market uptrend is intact as small caps surge, but software sell-off hits NASDAQ. So reading through, they discuss the weakness in the software sector, and I think this phrase right here is very, very important. And reading it, a key part in gauging stock market health is paying attention to the price action in leading growth stocks. In this vein, Friday's session was disconcerting. So this is a red flag popping up. You want these leading stocks to be acting very well, and a lot of them were hit very, very hard late last week. Fastly, DDOG, BL. A lot of these leading stocks lost the support of the 21 EMA that they had held throughout this entire run-up, and other big decliners, you can see they talk about Coop, DocuSign, Dynatrace, Ring Central, and overall it was a distribution day on the NASDAQ. And overall their view remains that we are in a confirmed uptrend, and they say that even though this action from the leading stocks was a bit disconcerting, it wasn't unexpected given that we were up a bunch of days in a row and we were right up against the upper channel line. And down here, they talk about a few different stocks that aren't in the software sector that you might want to keep an eye on. And overall, their view is still a confirmed uptrend, as I said, and we still only have 3 distribution days on the S&P 500 and 2 on the NASDAQ. So that is the IBD Big Picture article. Moving on, we've got the GMI signal from Wishing Well blog, and overall, it is still green since April 27th. And the current GMI score since this past Thursday is a perfect 6 out of 6. So overall, we've got the green light for both the GMI signal as well as IBD. And my view as well is we are still in a confirmed uptrend, but with all the leading stocks in the tech sector being hit hard, I will be very selective with new setups, and I'll be looking for stocks outside the tech sector to potentially find new entries. So that's pretty much it for the video. Thank you guys so much for watching. Please remember to leave a like down below if you enjoyed, and subscribe if you're new to the channel, and I'll see you guys in future videos.